if you're waiting for like the right interest rate, you're paying 100% interest right now on your rent because it's not going anywhere. It's not going to benefit you in the future. Okay. And then now let's redirect that money that you're paying on a rent and redirect it now to your own home. Welcome to the Earn the Signature podcast. And like every single time, we're here with our rockstar agents. This time is Victor Avila from our JD Signature team. And today we're just going to talk about buyer mistakes. Buyer mistakes. The mistakes that buyers do in real estate, especially the first-time buyers, because we're going to talk about the first-time buyers. And hopefully this podcast reaches the right audience that are looking to purchase homes. And we teach you something today because we've been doing this for a very long time, and we've seen this all the time. All right, so let's dive into it. How you doing today, man?
Doing good. How about yourself?
Good. You ready to get some knowledge out there to the audience?
Of course,
all right. So as first-time buyers in the real estate world, we deal a lot with them, right? There's a couple of main points that we want to discuss today that, we see on an everyday basis. Okay, so let's talk about the first one. Buyers who are timing the market correctly. So waiting for interest rates to drop, or they're waiting for the right deal to come, thinking that maybe price drop is going to happen. What are your thoughts on that?
Well, I think that, if you're waiting for the interest rate to drop, it already dropped, right? So, like, for example, like with here in Central Florida, if you go to a brand new construction, you can get a 3.99 rate fixed for 30 years, right? Which that's amazing nowadays, If we look historically, the rates were not 3.99, right?
Yeah,
what we saw in COVID, that's probably not going to happen ever unless there's another pandemic.
Yeah.
Right? So I think if you're waiting for the rate to drop, one, you can always refinance the rate, right?
Yes.
But you can never refinance the price.
Correct.
Right? So if you're looking to purchase, okay, once the rates do drop, if they drop more than what it is now, that means there's going to be more buyers in the market, okay?
Correct.
And there's also going to be more demand for the house, which means that, the rates drop, but the prices go up.
No, that's true. So talking about that interest rate, though, very important. People don't even talk about this. There's a lot of, and there's different markets. We're talking about Central Florida market, which it's going to duplicate in different other markets because this is what builders do. If you are waiting for interest rate to drop, if you're buying a resale, there's not much you can do. Can you buy it on a rate? You can.
Yes.
Okay. Historically, just like Victor just said, we're talking, high sixes, sevens. When I started in the industry in 2005, 6, that's where the interest rates were, that 2.99, that 3% that people, had during COVID is not going to exist again.
Yes.
But can you go to builders right now, and builders are investing into the buyers, buying them? It's costing, I don't know how much, $30,000,
$30,000,
$35,000 to buy down the rate from like that high, mid sixes to high sixes that you can get maybe an FHA currently today. We're in May right now, to a 3.99. You heard that right. 30-year fixed 3.99, which is going to drop your payment probably, I don't know how much, $1,000, $800.
Yeah.
Something like
so.
About so. You can still get that. So there's no point in waiting.
Yeah.
Because you just got to find the right opportunity.
And if it ends up dropping more than 3.99, which I don't think it will at any time, you can always refinance the property, and get a lower rate. But, besides that point, go ahead.
So what about buyers just timing? Not really about rates. Maybe it's a little bit about rates, but what about just timing? Saying, I'm just waiting to see what happens in the market. What are your thoughts on?
You're always going to wait.
It's a good answer.
Because here's the thing, right? I've heard this 3-4 years ago from all our clients. Yeah, I'm just waiting. And, obviously we follow up with them, and every single year we follow up with them and say, no, I'm just waiting. I'm still waiting. And all that waiting, a house that they could have bought 4 years ago at maybe $300K, now it's worth $500K.
Yeah.
Right. So the more you wait, the more, you can possibly lose out on a lot of opportunities that are right now in the present.
Very good examples. We have, just like you said, 3 years ago.
Yep.
We were looking at homes in certain sectors. We work a lot in like the Orlando, the Lake County area, which is their suburbs, close to Orlando. And we could find homes I mean, right in Groveland, I remember, like in the mid 200s.
Yeah.
And those homes were going to be there this weekend. Those homes are like what now? Like 400, four and change, right? So if people are waiting, all they're going to do is that. So one of the misconceptions I want to clear up today for the first time buyers is that, you know, the real estate market's still going to appreciate.
Yeah.
A healthy market's 8 to 10% a year. Okay. COVID, forget it. For it was like 25, 30%.
Yeah.
Not going to happen anytime soon. Okay. Maybe once in our lifetime is what I say. I've never seen that. So as you wait, that percentage of equity being built is still going to happen.
Yeah.
Okay. So what is your advice to this first time buyers if they're, I got to wait. I want to wait till, you know, maybe something happens or whatnot. What is the best advice to those first time buyers that you can give with your experience?
No, my advice is just to look at the trend from the past already. I mean, if we've seen that, you know, if you would have bought 3-4 years ago, your monthly payment would have been a lot lower than now, right? Like for example, like if I bought my house 2 years ago, right, and I was you know, paying $2,600, right?
Yeah.
If I would have bought it, I got a great example. My cousin, which he lives 3 minutes, he used to live 3 minutes away from me. He bought a house in almost the same community, and he bought that about 5 years ago. His monthly payment was $1,800.
Oh, wow.
Right? Same house now in that same community, right? Your monthly payment's about $2,700. It shot up $1,000.
Yeah.
Right? So that's how you know, if you're looking at the trends, you know, you're just losing out on opportunity. So I would say for those people, the first-time home buyers, I would say go out, look at all the options that you possibly can, and think of the now and think of the later. You know, think of that. Okay, yeah, my payment might be $2,800 now, right? If for some reason the rates do drop less than what it is now, then I can always refinance, right?
Yeah.
But you know, you're also losing on the opportunity that if your payment right now could be $2,800, maybe in 2 years from now it could be $3,200.
Yeah.
So that's some things to like take a look at.
Okay. And let's talk about real quick, because we see this with first time buyers also. So going away from the timing now more into the actual home and what it looks like. And, you know, you got buyers that say, you know, I want this type of kitchen. I want this type of yard. I want this type of this. I want a 3-car garage. But you know, they're not focusing on what is it that they can actually afford, right?
Right.
So let's talk about for a minute here. And, you know, I think one of the mistakes we see all the time is there's buyers that are looking for a specific type of house versus looking at it more as an investment and saying, I'm going to get into this for the investment side of it. Yeah, you're going to live in and all that. And then start there, and then later on we'll figure something out.
Right.
What do you have to say?
I mean, okay, so there's 2 different types of first-time buyers, right? There's a first-time buyer that has great credit, great income, and for those first-time buyers, I'm gonna put them on the side because those first-time buyers, you're allowed to be picky.
Yeah,
you know, like you're allowed to be picky. Like if you're making great income, great credit, you have a great job, you're stable, and everything, you did everything that you needed to do in order for you to be picky. Yeah. Right. Now, for people that might not be there and can barely qualify, you have to think about it as an investment opportunity. Because the thing is, this might not be your forever dream home and you're going to live on it for years or whatever, but it's a stepping stone to get your feet wet in the real estate market, right? So once you're in there, you know, you might not 100% love it. You know, you might like it, but not love it. You can live in there a couple years, you know, wait until the property appreciates and then later sell it, have a chunk of the down payment ready from your equity, and then you can go ahead and use it to go towards your dream home.
That's an amazing point. And I'm glad we brought it because the more that we can transmit this message, those that, again, we put aside the ones that, you know, have made it, are blessed and can buy that $600,000 house, no worries. We're talking to the ones that, listen, you need to think about where your money's going. Your money's going to rent right now because this is your first home. Instead of putting it to a rent that's not going to go anywhere. Okay, and then forget about talking about interest rates because what's the interest rate of rent?
Oh, it's 100%.
100%, right? So let's go back to the interest rate conversation for a second. You know, if you're waiting for like the right interest rate, you're paying 100% interest right now on your rent because it's not going anywhere. It's not going to benefit you in the future. Okay. And then now let's redirect that money that you're paying on a rent and redirect it now to your home, because that house in the investment side, okay, it doesn't have to be perfect, because the statistic, by the way, is that first time buyers will keep a home between 5 to 7 years max. People will say they'll die there, but they won't. You know, they're giving us a call already. I have a first-time buyer that came to me in 2017, and we're in their 4th home right now.
Yeah.
And called me to sell the last one we sold them 2 years ago to buy another one. So that's always going to happen, because things change, the situations change. You get more kids, you have a better job, whatever. So thinking about more of like the investment side of it, that's going to give you benefits, not only on that this is now for you, you're building equity, the home that we talked about that was, you know, you're buying for 350 is going to be worth maybe 500,000 in 5-6 years, who knows. And now this is where you're at. So that's the mentality, that's one of the mistakes that we see every single day. What other mistakes have you seen with first time buyers?
I think that a lot of people get caught up with trying to find the perfect house. Like I need to go find the perfect house. I need to go find perfect house, and they forget to get pre-qualified.
Oof.
Right?
Let's talk about that. Let's talk about that.
So I mean, obviously, you know, they don't know how all this works, right? I mean, you can have traditionally, if you're going through like an FHA or a conventional, you can make $1 million a year, right? You can be so rich, but if they did your taxes wrong, it's like you didn't make anything.
Yeah.
Right. So I get that a lot with a lot of, you know, truck drivers, CDLs, people that are 1099, where they make really good amount of money, but they don't know what the accountant did with their taxes, and they think that they can afford anything. And then they look at it and they can't even qualify for a bike. So So I think the number one thing that buyers need to realize is that before you go out there and fall in love with a house, get pre-qualified first. And then that way you can have that number of your pre-qualification, and you can look at just houses within that pre-qualification.
Yes.
Because you're going to save yourself, you know, if you're going to save yourself disappointment if, you know, you go out and you find a house that's way over your budget and you love it, and then now you're looking at houses that are within your budget, and then it's just kind of be like, it's going to be like a little disappointing.
So pre-qualification, is very important. Especially our first-time buyers that, you know, know that, you know, they have a certain income that they know could be borderline, get qualified. And like you said, a lot of our self-employed first-time buyers, you know, so we got people making a ton of money, but the taxes with the deductions are going to say something else. Okay, so pre-qualification is the most important thing, should be the first thing you do. That's what we do in our initial consultations, to get you in there, because that's what's going to let you know what you really, really qualify for. And let's talk about qualification for 1 second, because they do give you an amount that you qualify for, right? Which is normally translated into a purchase price. But essentially, what really they're qualifying for you is a monthly payment.
A monthly payment.
A monthly payment. And can you tell us a little bit about monthly payments, like what you have seen out there, not the amounts or anything, but as a first-time buyer, how does that translate monthly payment, and what they should feel comfortable with? What else on a monthly payment that they should consider?
What do you mean?
Like a first-time buyer, you know, they maybe have a monthly payment in their mind, but the bank might give them a higher one. You know what I mean? They said you qualify for more, you know? So what advice do you give to those first-time buyers where they have a choice of, you know, they qualifying for a higher amount, they have an amount in their head, and they don't want to purchase a home because they want to stay in that lower amount, but the only thing that, you know, the ones that they want is a little bit higher and they qualify for it.
Oh, I understand.
Yeah, you know what I'm saying?
Perfect. You know, my advice to those people are, I mean, yeah, you want to pay a lower amount.
Yes.
Right? Like, let's say you initially wanted to pay $1,800, and you get qualified for $2,500, and all the brand new houses are $2,500.
Yeah,
right. Is that what you're saying?
Yeah, exactly.
Okay, perfect.
Yeah, exactly.
So, you know, I don't think. Actually, I know that probably single-family homes here in Central Florida are no longer going to be like, you know, in that range no more, where it's like, you know, $1,500, $1,400 for a mortgage. Yeah, in my opinion. Now, obviously, you can get stuck paying $1,800 with rent.
Yeah,
right?
Of course.
Then 2-3 years pass by, and now you're paying 30, 40, 50K. Maybe your situation changes. Now you're no longer pre-qualified because you decided to go to a different job, or you decided to switch from 1099 to W-2 or W-2 to 1099. So, yeah. So I would say if you have the opportunity to get your feet wet in the real estate market, and you qualify and you can afford the monthly payment, I would say just do it.
Just do it.
Do it, because you might wait. Oh yeah, I want an $1,800 payment, and I want to see what happens. And you might wait, and that $2,500 payment that initially that's what a house is worth could be possibly in 2-3 years $3,000.
Yeah,
right?
we've seen it.
So
we've seen it
exactly, and we've seen that already. That's already happened in Davenport, in St. Cloud, in Groveland.
Yeah,
it's already happened. So I would say just go with it. Just stick to it. If you qualify, take the opportunity.
Take the opportunity. That's it. That's it. And we're going to end with the last point. Mistakes that clients can make, the first-time buyers make. Once they get into a contract, what mistakes can they make during the transaction that will cost them the transaction if they don't, if they make these mistakes?
So, okay, I'll give you a great example of a story that I've had with a deal that I fell through. I had a client that him and his mom were barely qualifying with credit, barely qualifying with income. Like, literally, like if they took one day off, it's done. Like they're not qualifying. And I had this client that for somehow, some way, we got them qualified after like 3-4 years of them trying with different realtors, different lenders, etc. We finally got them qualified. I put them on their contract. They found a house. Put them on their contract. Everything was going good. Now, there's one thing, guys, that when you get qualified, that is not your approval, your final approval. Okay. They will check if you're still working at the places that you're working and how many hours, etc. So in the middle of this deal, I think it was 2 weeks before closing, I get a call from the lender and they say that he no longer qualifies because he went from a full-time job to a part-time job. Like he went from, it was the same job, but he just didn't want to work full-time. So he just switched it to part-time. Yeah. So I give him a call and I'm like, hey, listen, like you no longer qualify. What happened? He's like, oh, I thought they were done checking, so I just switched my full-time to part-time. Yes. And yeah, I thought we were good. And I was like, no, because they're going to check like 3-4 times if you're still at that job, etc. So because of buyer negligence, he lost his deposit, right? Because obviously it was technically his fault that he went and out of his way to switch from full-time to part-time. And he lost his deposit. He couldn't qualify. He didn't have a home, etc. So when you're going through the process, make sure that every single variable remains the same as when you got qualified. Don't take on any credit cards. Don't switch from full-time to part-time. Don't switch any job. And then after you get the home and after you get the keys, maybe after a couple months, then you can go ahead and start doing your moves or whatever you want to do.
Correct.
But before closing, do not do anything.
We tell them to live lean and don't breathe for 30 days, 45 days.
Do everything as what you were used to do, like don't take out any credit cards, don't take out any car payments, don't switch your job from, full-time to part-time, etc. Just leave everything the same.
I love it. I love it. I love it. So during the transaction is one of the most crucial points like we just talked about, stay educated, live within your means during those times. It's like you're literally saving up. And we talk about you talk about credit. Don't put your credit cards up. Don't get new credit. Yep. Don't go get a new car. I had a client who lost their house because they
and their deposit probably
and their deposit too because they got a car in the middle of the transaction, and it was because my car was all messed up. I needed someone to get to work. It's like but you just increased yourself another $800 in debt monthly. So that's it. We're done. So these are the things that we see every single time, and these just were a few of probably many that we've seen throughout our time. So our advice to you, number one, is get educated. I think get educated with what is it that you need to do to start the process. Get with a real estate professional if you're in the Orlando area. Get with us because we'll definitely give you the path to go, and then think about the forward thinking of what's the home that you're buying. How is this an investment that is going to be a long-term gain for beneficial? So very important. Any last points?
I mean, to summarize, pre-qualify first.
Yes.
Right? Before pre-qualifying first, actually, go look for a real estate professional. Because that's another thing, too, that most people, they try to do everything on their own. Yeah. Right? And
ChatGPT.
I've helped some people that if I wasn't there, and this is just like, trying to, in my humble opinion, if I wasn't there, they wouldn't have been able to make it. It's true. Because during the underwriting process, there's so many things that go on into your underwriting the loan and everything. They're going to ask you for so many documents, IRS documents, IRS documents, bank statements, bank information, transaction histories, and everything like that. Where, the realtor, if you have a good realtor, he's going to help you throughout all that, and it's a very stressful process through the underwriting process, because there's a lot of people that are not very tech savvy, and they see the list of conditions that the lender provides them, and they're like, I can't do that. And I feel like a lot of deals fall through because of that. Right. So if you have a really good realtor behind your back, they can go ahead and help you navigate through all those conditions and get you that final approval, So number one, find a good real estate professional that can help you. Number two, get pre-qualified.
Yes.
Number three, decide whether you want to go through a brand new construction or you want to go through a resale. Obviously, factors matter. Like if you want to be in a certain location, then you might have to go through a resale.
Yeah.
If you want the best possible deal right now, it's probably a brand new construction.
Yeah.
And then after that, leave everything the same as you started with your pre-qualification. Don't change anything. And then you close. After you close, congratulations. Then from there, you can go ahead and buy the fancy car or do whatever you want it is to.
After the fact. House first, car second, if you can. Guys, this has been amazing. Thank you, Victor, for giving these points out. And don't forget to subscribe, like, and hit the notification bell on all the platforms for the Ernest Teacher Podcast. And we'll see you on the next episode.